Hello and welcome to another daily dose of insights powered by Container Exchange. My name is Christian, and every other day we bring to you the key news, stories, and data points that move container markets and hence your business. It's Macro Monday, so we look at the macroeconomic trade indicators and a few other sort of sentiment indicators and news out there that will impact the week to come. Let me quickly share my screen to help you orient yourself a little bit. Well, the week starts relatively slow, and then on Wednesday, Thursday, we have the first big core inflation indicators come in. We have Germany, the US, and then on Thursday, also China with their latest inflation figures. On Thursday, then also very, very interesting, the anticipated rate decision by the Bank of England. The market anticipates a rate hike of 0.25%, so 25 basis points to then 4.5%. Interesting here, there's significant speculation in the market and a lot of rumors in the market that actually the market overprices the rate hikes of the Bank of England, and first market participants are starting to bet against sort of the Bank of England and bet that the market is wrong in their anticipation of interest rate hikes. It's always a very dangerous game to play against the central banks. So let's see what comes out. In any case, that's sort of for the later half of the week on Thursday. On Friday, and then we also have UK GDP data come in on the back of that interest rate decision. So really starting from Wednesday, you'll see a lot of macro indicators that will move a market significantly. On Sunday, then, a bit of a different news. We have the general election coming up in Turkey. Of course, if you think back, there was the earthquake just a short while ago, and now this is the general election that comes up. Let's see what this brings and what this means for the future of Turkey. As we've seen over the past couple of months, quarters, there has been significant uncertainty in the Turkish economy. So any certainty that this election might bring will, of course, be much welcomed for container logistics in this region. And then there's two news articles that I just want to share. And as always, we publish the background reading and the show notes on Insights. So containerexchange.com/insights for more background for you to read up on. Bloomberg reports that world trade data begins to show early signs of reglobalization. So again, picking up the notion that two factors are shaping globalization or reglobalization in the months to come. One is companies being spooked by supply chain uncertainties, wanting to diversify their supply chains. And then, of course, geopolitics, the splintering of world trade into geopolitical blocks. There's, I think, 5 or 7 interesting indicators to watch on that Bloomberg article, so I can highly recommend reading that. And then we have sea trade news, and I just put that in there. It's not really relevant usually for container logistics if you look at secondhand prices of container vessels. But in this case, I wanted to share it because it's secondhand vessels are currently trading at par or even at a premium to new build container vessels. And that, of course, because they're immediately available and they don't have a lead time of 2 to 3 years until delivery. And that signals short-term optimism in the market. And that optimism is not only relevant for vessel trading and charter rates, but also for container logistics as a whole. And that's why I wanted to push it here. Have a look at that. Think about how ship owner sentiment impacts the market and the container freight rates going forward. Higher charter rates mean sort of higher required box rates to break even, and vice versa. If box rates then fall too much, suddenly charterers get into troubles with payments. So it's all interconnected and linked. That's it from me for today in terms of Macro Monday. Have a very fantastic start into the week, and talk to you all later on Wednesday. Take care.